So this is going to be part 3, the final part of the Order of Operations series. And I saved the entries for last because it's probably the most important thing, and that's what this class is going to be about. For this, I'm going to just find a random example because I don't want to really find something cherry-picked. So let's see if we can find something good. See, I actually remember what happened here. It's kind of cheating, but we'll still review it anyway. So this was the day that we dumped. I'm pretty sure like this was like the high of the day, and then we just instantly dumped the rest of the day. So this is kind of a bad day to do, to be completely honest with you, but we'll do it anyway. So looking at this, you would want to see a soup. However, it takes a little bit of time. We do get a CISD about right here, an inverse, and the same exact spot as a 2022 model, which is, BPR. Let me actually remove the gap. Alright, so we have an inverse gap here, and 2022 model CISD, another 2022 model right there, and we have a soup low, and we have multiple equal lows below, sell side targets, all that kind of stuff. So for this class, like I said, it's going to be on entries. So in this case, where would we try to enter at? So before we get into actually how to get in, we have to talk about what your actual target is for the entry, right? Because according to the framework, a soup will happen after, the highest probability turtle soup is going to happen, once we hit an external swing high or low, or when we're inside of a gap, or when we have an SMT, right? So in this case, we don't really have any of that. It's more like we just tap into a premium gap, which was, this one right here, this 5-minute. That's what this box is. So we hit a premium gap. We have a soup, CISD. The checklist is being met. As far as a target, you want to be in a trade before we hit this turtle soup low, right? Which is also, an internal low. Why am I calling this a turtle soup low? It's because we hit a discount PDA, which was the OB. CISD, but it's missing stuff. We're not here to talk about all that yet. But just keeping in mind, if you were to enter this for a short, you want to be in a trade before we hit the turtle soup low. That's the ultimate goal for any of your trades. That's what it should be, is to get into a trade before we hit the turtle soup low, because that is going to be your target every single time. So just looking at this picture right here, let me clean it up again. Would you say that you want to get in this trade right now, like where we're at? Probably not, right? Because this is going to be our target, so why would you want to take a trade, 2 points away, right? It's like 4 points away, and then your stop has to be way up here, 60 points. That's terrible. You wouldn't want to do that. So in this case, it would actually make more sense for you to take this inverse at the top. Now, of course, that is hindsight, right? This is not the best example for what I'm trying to explain here, so let's actually see what happens. Okay, so remember, this was the target, the turtle soup low. We displaced through that. And if you remember from the first class, when we displace through a target, it usually means the drawn liquidity is much, much lower. And in this case, we have a bunch of equal lows, which is our, these red lines here. And it looks like we have a massive sell side target way down there. And multiple sets of equal lows below. So keeping that in mind, we have a new internal low, which would also maybe be considered a turtle soup low. It's really nice, it's more like an internal low, because like I said, the draw should be lower after closing through that. So in this case, if this is your turtle soup low, where's your best chance to get in? Well, you could get in here on the 2022 gap that was left, or you could try to get in on the actual CISD, which would be this bearish OB. It's really a breaker, but we'll just call it a bearish OB for the sake of keeping things simple. So your best bet in this exact scenario is to probably get in on this gap if you can, because you want to maximize your profits and you want to still be safe because yeah, this is about a 2 hour trade. You'd have your stop probably just right there above that high. It would make a lot of sense for you to enter that, and you can see it works. So I'm actually going to go do a different day because I know exactly what happened this day. That's kind of cheating. All we did was basically just dump the entire day, so I don't want to use this as an example. So what I'm going to go and do is find a different day. Actually, I want to try to find a bad day, and I think I think Thursday was actually a pretty bad day. In my opinion, that was a bad day, so I actually want to go to that because I know I don't remember anything from that day. So looking at this, we swept the data low. We also swept this low, which I'm sure is a very important one. This one right here. Let me just confirm that by using the higher time frame thing. So this right here to my right is going to be the higher time frame, and you can see this right here is an ITL, low inside of fair value gap. That should act as a soup. So keeping things, in mind with our framework, we would want to see this 15-minute ITL swept and the cycle to repeat. Okay. Remember, this is a bullish 15-minute gap. It's an ITL. That's that's the model. That's when we expect a higher probability of turtle soup. So let's see. So we hit that low. And remember, this is the 1 minute, so it's going to take some time for us to actually come back up. But all we need, is the CISD inverse, all that kind of stuff, right? So let's see what happens. So we actually dipped down and we hit the 15-minute order block down here, which lines up with this bullish gap on the 1 minute. And it looks like we're starting to get our framework here, right? Because looking at things in the internal scale, we have a turtle soup there, CISD, and we should be getting an inverse pretty soon, right? Now in this case, where would your turtle soup high be? It would probably be this high right here. That one in the gap. It's a 1 minute ITL up here. So we'll just call that turtle soup high. That's going to be your target. Another good target could also be these equal highs right here, right? So the whole point of this is you want to be in a trade before we hit at least these equal highs, and definitely before we hit this turtle soup high. So where would your entry be, right? We don't have a 2022 model yet. That's another thing to note. So we have a turtle soup down here. Let me start marking this stuff out. Turtle soup, CISD. We're waiting for an inverse, but we have no 2022 model. So off rip right now, you would say we're missing some ingredients here. I'm going to wait for us to maybe soup this low again and see if we can get the framework. Okay, so we did hit the low again, because remember, no 2022 model yet. Let's see if this low will act as a turtle soup and get a clean framework. Okay, that's what it looks like. This low was hit. We are about to get a CISD. Let me just move this back. We do have an inverse right there. And we are about to get a CISD, which would technically be up here, would be the true CISD. But you could easily just consider this to be your CISD. And it looks like we're about to get a 2022 model out of this gap. Okay, so we never inverse the gap, so we're still missing stuff. Let's see if it's going to repeat this time. Alright, so this looks a little bit better. Remember, the candle that gives us the CISD is going to be a fat displacement candle, right? It looks like that's what this is to me. A soup here. We have now a very obvious CISD. You can consider this the CISD, or you could consider this the CISD. The point is that one candle gave us the CISD on both, so it's undeniable. You can't say that this is not a CISD. Whereas this one, you kind of have to guess if it's going to be a CISD here or here. right? So I hope you guys can understand why this is much more valid than what just happened here. Okay. Also, we have a clean inverse, right? So not only did this candle give us a CISD on both legs, it also gave us an inverse in the same candle. So now we didn't get the 2022 model yet, and I think it is 9:30. So all we're waiting for is for 9:30 to hit. And remember, we had equal highs here; they already got hit. So we're still missing the 2022 model. But remember, I said you wanted to get in the trade before we hit this, definitely before we hit this turtle soup high. So in this case, the best place to get in would have been the inverse here, right? And of course, this would be your turtle soup low down here. I'm going to answer a question right quick. Sorry from the bottom says, hi Playa, would a CISD that creates an FVG be a higher probability CISD? Yes, actually yes. So that's a very good question. That's kind of what I was trying to get at when I said, this one candle here, not only did it give us an inverse, it gave us a CISD on both of these price legs. Because if I go on the line chart, you can see this is a price leg down, this is another one down, right? One candle, this bullish candle here, gave us an inverse on all, it inversed 3 PDAs basically. It inversed the actual bearish gap, gave us a CISD here, gave us another one here. So that is like undeniable. You say that we're bullish, you expect the framework to continue, you expect us to inverse this one and maybe get a 2022 model. However, we don't get a 2022 model here yet. But that's what I'm saying. Your entry should have the idea in mind that you want to get in the trade before we even hit these equal highs. The only way to do that, the only PD arrays that support that idea, is this inverse down here, right? And in any case, you would put your stop at the soup low, and you can see, that's the framework. We come very close to hitting that soup low, but we don't do it, right? And it's because we're still trying to do the framework. It's just that we don't have everything checked off yet. So of course this also is not the best example, but all you need to know is that the draw should be the turtle soup high because we're starting to get the framework. And we did inverse this external gap here, right? But I'm not really here to talk about all that kind of stuff. But okay, so one level of liquidity did get hit, which was these equal highs for 23 points. But we did not hit this turtle soup high, so then that would mean, of course, the cycle repeats to the bearish side. Unless it's going to be another soup. So I actually want to see if this is going to be another soup, but because I don't actually know what happens here. But to be honest with you, it looks pretty choppy. This is a pretty choppy open because we inverse the gap up and we come right back down and then come right back through it again. And then we hit the turtle soup high. So let's see if we continue up. Because remember, if we continue higher, that means that the draw is likely higher. So I'm going to pause it right here and talk about where would your entry be for this. Well, to me, if we're saying that this is a bullish soup, we're still missing some things, okay? What are we missing? Well, we're missing an inverse. There's no bearish gap on this leg. We do have a soup. We have a CISD here, or here, whichever one you consider. I'm just going to consider this one to be this real CISD. But we don't have a 2022 model. But however, we do have what looks to be a manipulation leg. And so, of course, the checklist is missing something. But at the same time, this will probably still work just off the fact that there's a manipulation leg here. Right? And remember, if you go to the line chart, you can kind of clearly see how it's a manipulation leg. Right? So according to the framework, we're missing something, but you could also consider this to be the the thing that we need to see inverse and then get a 2022 model out of that. So really what I'm going to do here is I'm going to group both of these bearish fair value gaps together, and if we inverse them to the upside, that would confirm to me that the draw would probably be this high up here, which of course is a 15-minute high. You can see it's basically buy side. So I want to see a 2022 model gap somewhere out of when we inverse this gap. Okay, and this is going to be your soup high. That's going to be the draw. That's where you want to get in the trade before we hit the soup high. Remember, that's the main thing. You could have already honestly entered off the CISD in this case, right? As long as as long as you know to put your stop down here, right? You could target a 1-to-1. I'm sure that already hit. Yeah, so you've already got a 1-to-1 trade there. We'll just let it play out and see, like I was saying. So we want to see an inverse here, and we want to see a 2022 model. Well, guess what? We have a 2022 model here, bullish one. It's up to you if you feel comfortable trading this 2022 model. For this one, I honestly would probably have a stop somewhere like right here below the CISD, and then target the soup high. Let's see if that actually holds. So we do get the inverse, however, no entry for the actual 2022. So in this example, it looks like we're just going to head straight to the draw on liquidity. But let's see if we actually come back to a 2022 model. No, we don't. So we hit the draw. So in this exact case, it looks like the only entry was, or the best entry here was the CISD, right? Because that was the only valid thing. That was your best risk to reward. As long as you know that this is a manipulation leg, as long as you can see that the framework is looking like it's about to happen, you can take a trade. Even if we're missing something, you can still take a trade as long as you get in before we hit the soup high, right? So maybe in this case, you wouldn't even taken this because we already hit the soup high. However, we still had the other one. Right, we didn't hit that one yet, so let me remove some of this so you can clearly see what I'm talking about. So this was our soup high. Right, this is the one I said should have gotten hit when we were coming back up the first time. We stopped here, making this the new internal high, or a soup high, a smaller one. Right, we dump through this, come down, get another soup, come back up, CISD here, CISD, take the internal high before giving us an entry for the CISD. But you could have still taken this because we never hit the actual soup high. But you, of course, probably take some off or take profit, or maybe even move stop to break even once we hit the soup high, because remember, you want to get in the trade before we hit the soup high. So this is a little bit more of a complex example. You could easily, target a higher time frame draw on liquidity, which would be buy side or another turtle soup high. The reason why this didn't work is because there really is no smart money reversal, right? If I go in the line chart, right, it almost looks like we do have a manipulation leg down, but we don't get that speed back up. Remember from the last video, what you want to see for a manipulation leg or a smart money reversal is a quick move back to the upside if we're bullish. If we're bearish, you want to see a quick move back to the downside, right? It's going to be quick. This right here is massive move down followed by a massive move, sharp move back up, right? Even if I go to the replay back to this exact point, this right here is sharper than this right here. You see how we stopped halfway back, to getting to this high. We stop if you're looking at the line chart, right? You don't, like I said, you don't have to notice the manipulation leg in time, because I know this is pretty hard to catch in live time. But all you need to know is, okay, it looks like we have a manipulation leg to the upside. The framework should still play out just off that. And that's when you would expect this to be inversed. Or you could take a 2022 model. But in this case, if you miss the CISD, the best the second best trade would be just to take the inverse once we inverse the last gap in the leg. Okay, and just remember, you want to get in before we hit the sup high. So according to the framework, right, we shouldn't hit this sup high. Let's go back actually. According to the framework, we should not hit the sup high before hitting the sup low for truly bearish, right? But what we can do sometimes is still inverse the gap up and then stop maybe a couple ticks away, then dump straight to your target. So keeping that in mind, it's up to you if you want to have a hard stop if we just inverse the gap. Because 25 points, don't get me wrong, is a lot of points to lose. But in this exact example down here, it's still a big stop. With CISD entries, a massive stop. It's up to you whether you want to have a stop loss at the sup low, because technically you should. But of course, that's a massive stop, right? You could have had your stop somewhere like this. You could have had your stop, just 4 points. It's up to you. It's up to you at the end of the day how much you're willing to risk. I'm just here to talk about where you should want to enter and to get, the max risk to reward on your trades. Okay. And, maybe you might have even moved your stop to break even here. I'm not even sure, But to me, it looks like a loss. So moving forward now, we have what looks to be a potential sup, but we have equal highs above, right? So this is where kind of narrative comes into play. Because either way, no matter how it looks, no matter how good the short will look, we may still hit these equal highs depending on how strong the draw is. And I'm actually betting that we probably will. So this also may be a bad example because we may start chopping. Okay, so this is actually a pretty good example of what I was just talking about, the fair value gap failing in this exact example. So what I'm going to do is now I'm going to talk about what happened here. So we have a turtle sup. We have what looks to be a CISD down here. Ignore this gap for now. We have a turtle sup low. And we have an inverse as well, right here. So remember, your ultimate goal is to get into turtle sup low, right? You could wait for confirmation on either one of either the inverse or the CISD, depending on where you see fit. However, as we all know, you can enter on an inverse, you can enter on a CISD. It's up to you whichever one you want to take. That's what I'm trying to explain here. It's up to you, okay? You could have taken this inverse and take profit, if you're happy at 42 points and maybe you're trying to target a turtle sup low for 50, right? It's up to you. Maybe you cut the trade once you saw, us come back here. Maybe you move stop to break even. I don't know what you want to do here. It's up to you. That's what I'm trying to say. All I'm here to point out is that where you could potentially enter from. You can enter from this inverse. You could enter off of the CISD targeting this low. Right? It probably would have been a loss because as you can see, we didn't hit the low. But that's what I was trying to say is, bottom line, if we're truly bearish, we should not hit this high. But you could see how we come back up and re-inverse the gap to the upside. Say you entered there and you had a hard stop if we inverse the gap. Guess what? You just took a 15-point loss, but we never hit the sup high, and then we end up hitting the sup low, which is the true draw on liquidity. I'm just here to talk about what we should and shouldn't do. It's up to you whether you want to stick to the model or not, okay? Because what we shouldn't do is hit the turtle sup high. In this case, we hit the turtle sup high because we weren't ready yet. This right here, we are ready, and we don't hit the turtle sup high, and everything still works, okay? And if you entered off the CISD and say you had a stop right here for 50 points, you target this as a negative R, right? We as ICT traders should not be taking negative R trades, okay? This is a negative R trade. You're risking 53 points to catch 30. That's not ideal. Your best entry in this case would have been this inverse with a stop up here for 30 points, targeting the soup low for 54. Okay, that's still positive risk to reward, and maybe you move your stop to break even once we get the CISD. Right? It's up to you. All I can tell you is that you have to put your stop at the soup high, because anytime we could come back and re-inverse the gap, we could we could have, we inverse the 2022 model back to the upside too. This is a bearish gap in favor of, us going lower, and then we come right back down through it. But guess what? We don't hit the turtle soup high before hitting the low. That's the important thing here. So, like I said, it's up to you whether or not you want to submit to using the turtle soup high and sticking to the framework, right? If you do that, of course, you're going to have to size lighter. Maybe you won't want to size lighter, so maybe you just take the inverse and move stop to break even once we do something like this, Or maybe you take profit. Maybe you're happy with 45 points. That's a lot of points. Like I said, it's up to you. And just remember, we hit the turtle soup low, we get another gap here, and this is our true turtle soup low down here, which is also sell side, which means this gap should hold. If not, then we're going to come back to this one. Bottom line is, we should not hit the next internal turtle soup high, which would be this. Okay, so where would you enter? If just looking at this, where would your best spot be to enter? Well, for me, I would probably enter either on this gap in the middle, or I would enter on this gap in the middle. For the sake of how fast we're moving down, it looks like we may not even come back for this upper gap. Let me just take a look at the 15-minute here. So we're actually in the 15-minute BPR. We've already hit a level of internal. You actually should not want to be entering down here because we're in discount, premium discount. Right? If I was to mark this out from the very top to the bottom, you can see we're past the 50%, which means anything down here you do not want to be shorting in. Okay, because there's a very high chance we could easily come back up to premium, then come back down, because you only want to short in premium and you want to long in discount. Okay, which is exactly why I said the middle, because that's technically in premium, so it should work if we came back to it. So I'm just going to pretend I have a limit set here, a stop right here on the CISD for 30 points, 35 points, and then we'll do a TP down here at the soup low. Okay, so that would have tagged me in right there. Let's see if this is going to work. Remember, I have no idea what happens here. And there you go. So as you can see, I just want everyone to notice this. We inverse this gap back to the upside. But see, we're not trading the PD rate itself. We're still keeping in mind the framework. The framework is the most important thing here. And even in this picture, the framework repeated. I don't know if anyone else can see it. Sorry, I can't talk today. But we soup this high, and then the cycle repeats. Okay, soup here, CISD. However, there is no inverse. There is no 2022 model. All we do is have a manipulation leg. And if you remember, sharp move up, followed by sharp move down. Keeping in mind premium discount, which by the way, like I said, you would have to go to one of Leopard's videos to find this. And I'll probably try to link one in the description below. Or even at the end of this video, a good premium discount video that Leopard has. Keeping in mind premium discount, you only want to short in premium and long in discount. As you can see, we hit discount and come back right back up. Remember, I said technically this gap should hold, and I was going to enter a consequent encroachment of the gap, and you can see it's just above this black line for the 50%. which is exactly why it's best to short there instead of on the edge of this gap, right? Because although it would have worked, you're still getting less risk to reward. And remember, I had a stop loss at the CISD that we had to the downside. So I hope you guys understand how you're supposed to still follow the framework, because we're not trading off of what we see, or we're not, well, we kind of are, but we're not trading off of this gets inverse back to the upside, so oh no, I'm going to get scared and close out my trade. You could have actually, what you could have done here for the person who does not want to risk 35 points on the CISD entry, I'm at the CISD stop loss. You could have had your stop right here on the next gap, saying that, okay, I have the idea that this gap should hold because it's the one that's attached to the soup low, the one, you know, the one that we already swept. Therefore, this gap should hold even if we don't, even if we do inverse it, we should not hit a soup high, okay? Or we should not hit the next gap, or, you know, we shouldn't, if we do hit this high, it's going to be a soup. You expect the cycle to repeat again, okay? And you can see it did. And the best spot to get in on this, you know, fresh cycle, of course, would be the CISD, because that's the only thing that is here. There's no inverse down, you know, there's no inverse gap down. There's no 2022 model in here. The only thing that's available to us is the CISD. So another way you could enter off of this framework is you take whatever's given to you. But however, you have to keep in mind that if we're still missing ingredients, your trade may not last long. And what I mean by that is we could have easily, you know, you enter off the CISD here, and then this low down here, it becomes a soup, and then it comes back, stops you out, you know, break even, or maybe just full on stops you out, okay? Or maybe, you know, all we do is just stab this low again, right? Because if I go back to the replay, we'll just do it on this candle, right? So you say you take the CISD right on this candle. The only thing that should be technically guaranteed is that we're going to hit this low again, right? And then your stop would have to be on this soup high for 27 points. That's still, remember what I said earlier. We as ICT traders should not be taking negative R trades, okay? And keeping in mind, the soup low has already been hit again, right? So that's another thing. The soup low has already been hit, so you may not even have been wanting to take this trade. It's just not smart. The smartest trade in this case, assuming that you were not able to get anything up here, would have been consequent encroachment or the middle of the gap, because it's in premium. Remember, you short in premium, you long in discount. We hit premium, you have your stop up here, and then you have a stop. You have your take profit at the soup low, which for about 50 points, and then you could target the main soup low down here for about 90. Or really 89 points, and you can see it did work, okay? So, I'm going to go to a different day. Let's do yesterday, because I know yesterday there was a very good example. So for this, it's going to be cherry-picked, simply because I know there's a very, very good example here, and it's one that I took on stream with Reliable, and it can showcase exactly what I need to show you guys. So, remember, where do soups happen? High probability soups. Where should we expect the framework to repeat? In a higher time frame fair value gap, you know, or when we hit 50%, or we get an SMT, all that stuff, right? So in this case, we had 50% move. Remember, you're going to have to go to Leopard's video if you don't know about 50% retracements. We have a 50% retracement, we hit 50%. What should you expect? We want to see the framework repeat, okay? So we hit the high. It looks like we have a CISD here. We for sure have an inverse. Well, actually we don't. We don't have an inverse, but we have a 2022 model short there. Okay? This would be our inverse to take. And then we get the inverse. Where would your soup low be? Well, it'd be either this one or this one, right? Or you could even say this one because it's the OB, the low that we left when we tapped into the OB. Okay, so let's talk about entries for this. Well, if you want to maximize your profits, your absolute best entry would have been the 2022 model, but you can see we don't tap into that. Okay, so say we missed the 2022 model, and you only know that we should hit this soup low first. That's the only thing that we should hit first, right? Is this soup low. Where would your next target be that maximizes your risk to reward? It would be the CISD entry. And this one actually does give an entry. So you'd have your CISD, you'd have a stop up there for 41 points, and then you would target 41 points. Guess what? That's not a negative R trade. It's about 1-to-1. You just have to go, very light because it's a 41-point stop. Or in this case, you could take, you could exit if we inverse the gap back up. In this case, you would only do that because you're entering much lower, right? But the most ideal entry would have been getting in the 2022 model. Another entry you could have taken was the inverse play. But however, remember, this is terrible risk to reward, right? We could have easily popped right back up to rebalance all of this that was left. That's a 13-point take profit with a 71-point stop. You do not want to do that. Even if you don't have that, and you say, okay, I'm only going to risk the inverse play, that's 18-point stop for 12 points, 13 points. That's still negative R. We as ICT traders should not be taking negative R trades. Okay. However, if you're expecting the next soup low to get hit, then you could have entered on the retest for better risk to reward. You can see we hit the retest to the tick. Your stop again would probably be a close back above, maybe like right there for 15 points. And you could target the internal low for 32, which is amazing risk to reward. That's 2R trade. Or you could target this next soup low for 52 points, and let's see what happens. We hit the soup low. There you go. That's 3R trade. And then you have a runner set for this. Sorry, I did not mean to do that. You have a runner set for this soup low. Okay? And remember, guys, the entire point of getting into a single trade using this framework is that you want to get in the trade before we hit the soup low. So if you see the checklist forming, or if you see it, things being checked off, and we're only missing maybe one thing or two things, it's up to you if you want to take it. Okay? I can tell you right now that just off us being inside of a premium gap, us being into a higher time frame gap, us hitting, premium, because we're above 50%, us getting a reversal, a clean manipulation leg down, those are a lot of things being checked off. The only thing that we're missing here is an inverse right in this leg. However, we get it down here, right? But we get the CISD. So like I said, it's up to you if you want to take things like that. And we do end up reversing back to the upside. So let's see if we can find the framework to get us back to this turtle soup high and to catch an entry there. Okay, remember, this low may not get hit. It may get saved. There actually is another reason why we stopped there, but I'm not going to get into that. So you would say that this is a soup. You expect a CISD, which we get here. You expect an inverse, but there is no fair value gap on this leg to be inversed. However, we do have a 2022 model right there. And remember, if we have a 2022 model, we have a clean manipulation leg, we're in discount, we've taken out a soup low, we have a very obvious soup high above, right? should you enter this or should you not enter this? The idea is that you shouldn't enter this for long. However, it can still work. Okay? So if you were to enter this, the best entry would probably be on this 2022 model or the CISD that overlaps with the 2022 model. And of course, you would want to target the soup high. Bottom line, you want to get in this trade before we hit the soup high while also maximizing your risk to reward. And in this case, your stop would have to be at the soup low, sticking to the framework. Okay? So let's see. I'm just going to put a limit right there. Imagine I have a limit there, I'm sorry. And then we'll have a stop at the soup low. That's a 2-hour trade if we're able to get tagged in. And unfortunately, it does not look like there is a chance for us to get tagged in. Why am I saying that? It's because we left equal lows here, so technically we did not. Technically, there is no entry here. Technically. So no entry there, but we hit this turtle soup high, right? We left this unmitigated, and we have a turtle soup low, and we have another turtle soup low down here. What do you think that means? Well, it probably means that we can expect a soup here back to the downside. And that's exactly what happened. So we have our turtle soup high. We expect one of these highs to be soup. In this case, it would be this one. Also tapping into a bearish breaker. If I zoom all the way out, you can see that this is a breaker. So we have a clean inverse. We have what looks to be a CISD if we can close it through this. We have multiple unmitigated gaps below. Let me just remove the higher time frame fair value gap. So just looking at this, from the normal perspective, I guess you would call it, we tap into a bearish PD array that's in premium. Remember, you short in premium. This was unmitigated. We expect a turtle soup out of it. The framework looks like it may be checked off once we can get a CISD here. Okay. For this to be a manipulation leg, we would need to close through this low. As you can see, what we're doing is something like this. That's what we need to see here, right? So the best entry here would either be taking the inverse, as we hit the inverse, or once we get the CISD, or once we get a 2022 model, right? You have 3 options here. Let's see what happens. So we get all 3 in one candle. We come back to the inverse to retest it. You could have entered that for short. Not only that, but we don't hit into the next gap yet. We have a fresh 2022 model overlapping with the inverse. Yep, a bearish gap. You could have easily entered off the CISD here for a short with it stop at the turtle soup high, but that's negative R, right? Remember, I said we don't take negative R trades as ICT traders. You shouldn't. What you could have done is get in at the inverse gap. If I mark that out, that would be the edge right here. Get in there with a 30-point stop and a 35-point take profit. That's worth it. It's about a 1-to-1, a little more than that. Or the best case scenario is that we come back to the 2022 model, which we missed the first time. And so I'm going to just have a limit right there, pretend limit. And remember, your take profit is going to be down here. Let's see what happens. So we go straight through. Does not look like we are coming back for the 2022 model. However, your first real low that you should want to get in before we hit is going to be, these equal lows, the turtle soup low down here, and the next one down there. And we also have another inverse play right here. Okay? It looks like we got the inverse there, right? We have an inverse right here. So let me change that. An inverse right here. You could have entered, and I actually took this one yesterday, you could have entered there, have a stop for 28 points at this most recent high. Why there? Because you expect that one to act as a turtle soup if we were to hit it anyway, and then continue lower. So I just put my stop there, and then you would target the equal lows for 35 points. Still a positive trade, and then you could easily target the turtle soup low for 72. And that's exactly what we did. And this is a trade that I actually took, guys, too. So, the framework is still being met. We have another turtle soup low hit. However, you still be expecting this one to be hit, as long as the cycle doesn't repeat. But let's see if the cycle does repeat itself after taking this low. It looks like it does. So we get a soup, CISD again, an inverse, and then a 2022 model. So in this case, if we leave this high untapped and we came back down to this CISD mixed in with the bullish gap, that would be a very, very, very nice entry for long to this high. You could have a stop just if we inverse it or if we come back through this low. So we come back down and then we hit the target. If I move it out of the way, you can see we hit the target there. So it's honestly better to get in where the PDAs overlap than where they don't overlap. For example, this right here, all we had here was a 2022 model. It did not overlap with anything. But you can see if I drew out this right here, this order block on the higher time frame, on the 1 minute. Well, it's really a 1 minute OB here. So you can see we dipped down for the 1 minute OB. In this exact scenario, we're still technically holding the bullish gap, but we came all the way back down to the 1 minute OB. So maybe when you enter these trades, you would only really want to enter where we start overlapping PDAs, and then the only time where you would want to enter without an overlapping PDA is when it's very, very early on in the trade, like down here, right? Because we're missing a lot of things here. We have a sort of a manipulation leg, not exactly. We have no 2022 model down here. The only thing that we have is CISD and an inverse, right? And we have technically a manipulation leg, right? So you could get in early once we, if it's early enough in the trade, like if it's early enough in the leg and you're still targeting, 100 and something points and you're only risking 22, that's honestly worth it every single time, in my opinion. Right, so I'm just going to play it out and see what happens if, it hits. And so it does hit, right? So the original play worked. This one in the middle failed, okay? And I'm sure, let's see something here. I actually want to see. Were you longing in premium there? Actually, no, you weren't. So this was a discount entry. It still just failed, okay? Because you'd have your stop right there. I don't want to be unrealistic and say like you would take this gap here and then have your stop way down here. Okay, that's just not realistic. But this second one did work. Okay, I do want you guys to understand that. It's better to get in where they overlap than where they don't overlap, like this example right here. Okay. When it comes to entries, no one really likes to see like cherry pick stuff because it's almost like I'm getting it picture perfect every single time, and it's not really realistic. This right here is very realistic. This taking a loss here is very, very realistic because in the moment it looks like we're going to fly up and continue higher, but we don't. You can't win every single trade, right? Nothing is 100%. All you can do is stick to the framework and execute the trade how you do every single time. And I'm not here to teach you trade management or anything, but I probably would have moved my stop to break even here. I'm just here to talk about where you could enter and where you could put your stop loss and all that kind of stuff. Thank you guys for stopping by, and I hope this video helped you. Yeah, this is the end of the series, guys, and I hope you guys learned a lot. I'll see you in the next one. Peace.